Welcome and thank you for joining me for Tax Break. This is a podcast about South African tax for South African tax professionals and practitioners. My name is Pieter van der Swan, and in each episode I share my thoughts with you on a topic or a recent development in South African tax. And I try to keep the episodes short enough that you can listen to them whenever you've got a break somewhere. Now, there's often the perception that as long as an expense relates to your business and the business involves making taxable supplies from a VAT perspective, that you should be able to claim the input tax. Now, today I'm going to talk about a case that's a reminder that this is not always the case. So I'm looking at the Supreme Court of Appeal case of Aveng Mining Shafts and Underground versus the Commissioner of South African Revenue Services. So Aveng was a vendor, a VAT vendor, and its main business was to sink shafts and construct mines. Now, for some of the projects, it would then employ employees at the site or in the area where the project was, and it would provide these employees with accommodation and food, so meals, at the site or close to the site where they worked. And Aveng claimed input tax on this expense. Now, when this case was before the tax court, the tax court spent quite a bit of time to analyze the definition of entertainment, and it concluded that irrespective of whether you're looking at luxury accommodation, luxury type of meals, or basic accommodation and meals, if something is accommodation and meals, it meets the definition of entertainment. So the appeal court case It accepted that interpretation. That wasn't a point of contention. The judgment seems to indicate that Aveng based its deduction of the input tax to a large extent on the principle of neutrality. So in other words, from a VAT perspective, neutrality would mean that VAT should not be a cost to a business. And the way that the VAT Act achieves this is to say that if a VAT vendor conducting a business where it makes taxable supplies incurs an expense inclusive of VAT, then that vendor is entitled to claim input tax to put it back on the basis where it doesn't bear the burden of the VAT. Now, there's a few important things from the judgment. I think the first one I would like to highlight perhaps is a bit of a lesson in interpretation, and just a reminder again. So the courts in South Africa follow a purposive approach to interpretation. So in other words, the court looks at the wording of the legislation, the text itself, but also the context and the purpose to form an interpretation. Now, what Judge Kuhn said in this case is the following: the text and the structure have a gravitational pull that's very important and often conclusive. So in other words, the wording of the law and the structure of the law, irrespective of if you're looking at it from a conceptual perspective, the context and the purpose, the actual wording used in the law and the structure of how the law itself operates is still very important. You can't override and ignore the actual wording of the law by looking at the context and the broader purpose. So in all instances, irrespective of whether you've got a view that makes conceptual sense, you still need to consider and base your position on the actual wording of the legislation. Now, if we're looking at the actual wording of the VAT Act, that prohibits the deduction of input tax on entertainment costs unless that cost or that entertainment qualifies for an exception. What the case or the judgment also highlights for us is that one shouldn't be too liberal in interpreting these exceptions. So these are exceptions to costs that would otherwise be prone to potential abuse. So entertainment costs, as you can well imagine, there's a very fine line between, in most cases, entertainment for business purposes and potential entertainment for personal or private purposes. Right, so looking at the exceptions, there's some exceptions that apply to entertainment businesses. So in other words, where the ordinary activities of the vendor is to provide entertainment. And the court concluded, and I believe rightly so, that this was not Aveng's ordinary activity, so therefore it didn't qualify for these exceptions. The other exception that could have, or that could come into play, was that there is an exception where entertainment is acquired to provide meals and accommodation to employees who work away from their home and their normal place of employment. Now, in this specific case, this was not the case because the employees were specifically employed to work at the project or on the project at the specific site. So this exception also didn't apply. And based on this, the court dismissed Aveng's appeal. So in other words, they were left with the input tax remaining not deductible. So in summary, what can you possibly take from this? I think the first point in my mind is the point on interpretation, that despite context and purpose that where a specific answer might make sense, the actual wording and structure of the law remains very important. You can't override the actual wording by looking at context and purpose only. The second point is, if you're looking at entertainment, and similarly vehicles is often, there's a similar argument, the fact that the expense relates to your business where you make taxable supplies is not enough to deduct the input tax. There's actually a higher threshold here because these expenses are potentially susceptible to private use or potential abuse. So you need to go through the actual wording and see if you meet the higher threshold. That's it for today's episode. If you've got any questions or comments for future episodes, please send me an email. My email address is in the show notes. If you like the podcast, please go and subscribe on your favorite podcast platform. Tell all your friends and colleagues about it and like it on YouTube. And just finally, as always, a reminder that nothing in this podcast is intended to be tax advice. It's only for awareness purposes. If you're looking at a specific fact pattern, you must still get tax advice. Until next time, goodbye.